Okay guys, welcome back to another market analysis video, of which I'm just going to show you market structure firstly, and then secondly we're just going to dive into the actual charts, show you on how to analyze USD JPY. Just because we've analyzed USD JPY previously, we were looking for selling opportunities, of which it went in our direction, but like I didn't do the market recap, of which it's still okay, just because you got to see each and everything going on the charts, guys. So without wasting any time, let's get into it. Okay guys, thank you for joining me on the charts, and then we are looking at USD JPY. But like firstly, I'm just gonna move over the charts so that I can show you like how to map out like your overall market structure. So let's say the market is pushing down like this. Normally this is how you get your market structure, or everyone on YouTube will show you market structure like this, whereby whenever you have a break of structure right here, just because this is your previous high, then you have your low, lower high, lower low, then that means that you have an overall break of structure within this point. Then that means that this is your supply zone. That is where you're going to look for selling opportunities. And then around here also you'd have a break of structure giving us a new lower high, then a new lower low, then giving us another supply zone, of which it's around this point, having a new break of structure, just like that, guys. And then that is how everyone will show you market structure. But like I'm just gonna tell you straightforward that this is not how you map out your market structure, and then market structure should be looking like this. So let me just make a diagram. So we'd have an impulsive push to the downside, then you'll have your internal market structure like this, then you'll be having a realignment right there, then that is when you have your overall break of structure around this point here. Then after having a break of structure, we know that we must expect an overall realignment, of which the market has to push back up into areas of interest. So let's say maybe this is your fair value gap around this point, or an imbalance. So after even the imbalance, then we know that this is our supply zone around this point here. So the realignment will also give you market structure, whereby we have an internal change of character around this point. Then after even that internal change of character, that is when the market will create internal higher highs and higher lows, and then filling this overall gap here, of which is your imbalanced area, then pushing up, tapping into the supply zone. Then after tapping into the supply zone, that is when maybe you move over to the lower time frame, just because this is higher time frame analysis, guys. But like you can just use it on the 1 hour and then execute like on the 1 minute time frame. Then whenever we tap into this area, we know that we have to switch to the 15-minute. That is when you expect another realignment, giving us a change of character around this point here. Just like that, you have a change of character. After having the change of character, we already know, but like I'm just going to show you each and everything on the live charts. I'm just making a few examples so that you can understand what we are talking about. So around here we had the change of character, then internally the market will push to the upside, tapping into an area of interest just like this. And after tapping into it, then that is when the market will pull to the downside. And then also there will be internal structure, guys. This will be an internal break of structure coming back into areas of interest. That is another opportunity for you to take some selling opportunities, just because this is a new break of structure around this point internally. So after having that internal break, you have your supply zone within this point, and then the market will just do this up until it breaks this low here. Then after breaking the low, we already know that we have a new trading range. So let's say maybe we pull down just like that, breaking structures, then we have a new trading range. Then this means that this is your highest point, and then this is your lowest point within this area here. Then you expect what? A realignment, which means that the internal market structure has to pull back up into areas of interest, then get a realignment on the lower time frame. Then that is when you'll be looking for selling opportunities. So in this case, this is maybe your area of interest. Then that is when the market will pull to the upside just like that, and then you get like that internal market structure push to the upside, tapping into an area of interest. Then that is when you switch over to the 15-minute time frame, then you get that realignment. Then the market will continue doing its thing, breaking this low here, or the outer structure low, guys. Then this is how you just have to map out like your overall market structure. And then like I said, I'm just going to show you on the live charts so that you can see like what's going on the live charts, guys. So let me just remove that, and then this works in a bullish trend and a bearish trend. So let's say maybe I can just change this here. So this is the bullish trend. As you can see here, you have your low, then you have your high, then you have your lower high, then you have your higher high, giving us a break of structure. The market will pull down internally into an area of interest, feeling the imbalance. Then you get the realignment. Then that is when you buy, targeting the previous high, as you can see from that point here. Then that is when the market will pull back into another area of interest. Then that is when you look for your buying opportunities, so on and so forth, guys. But like, the most important thing here is finding your areas of interest, your imbalances, and then your liquidity, guys, just because that is very important. So I'm just gonna remove that, and let's get to the live charts. So on USD JPY, previously we were looking at this structure here. Let me just refresh it. So around this point, we were expecting some selling opportunities. Let me just check if this is correct or not. So yeah, okay, so this is correct. I just invest like my charts. So as you can see right here, this is the overall momentum, and then we had this overall structure pushing up. As you can see here, we had your high, your low, then you had your high, of which that leads to having a break of structure. So this is a break of structure right here. Then after having that break of structure, we know that there is an area of interest. As you can see here, this is your buy to sell candle, or your sell to buy candle in this case. Then you have your order block around there, or your demand zone tapped into. Then we had a new break of structure around that point. But like on the lower time frame, what you'll see is internal structure around this point, pushing to the upside, taking out this high. So after that, we had a new break of structure again. So which means that this is your lowest point, and then this is your highest point here, using the 3 candle pullback up until the market decided to break this low here, giving us a new change of character. So after having the change of character, we already know that we are no longer looking for buying opportunities, but instead for selling opportunities. So if we zoom out, you can clearly see that this is our highest point around here. This high is protected, and then you have your lowest point, of which it's this one here. Then we were expecting what, a pullback into areas of interest. For example, this is an area of interest. We also have a fair value gap. As you can see here, this is a gap. Let me just do that. This is a gap around this point. It must be filled at some point. Then it wasn't filled, but like, I was anticipating for it to be filled around here. So as you can see here, this is your demand supply zone around this point. Then after having that low, you can obviously see that we pulled back, and then we had this high here, then we had this weak creation around here, of which this is liquidity. And after having that liquidity, the market decided to pull down again, of which pulling down in this case, it means that this is your new high, and then this is your low here. So this is a break of structure, just like that. Then you can also use the 3 candle pullback. As you can see here, we have your 1, 2, and then it's already 4 around here, as you can see. Then pulling back into this area here of interest around here, the supply zone. And this is your low. As you can see, it wasn't taken out. This low here failed to take out this one here, of which this means that this was your break of structure around this point. So this is your previous high, and then this is your new low around that point. So which means that this high here is protected. When it's protected, whenever it's taken out, then it means that the market is no longer pushing down, it's trying to push back up. And as you can see from this point here, this is a fair value gap, and it wasn't filled. Okay, it was filled, and then this was your extreme supply zone. Then we had another supply zone within this point here. But like on the lower time frame, if you just look at it closely, you'll see that there is a supply zone within this area here. So the market pulled down, then we have a new break of structure around this point here. I'm not going to show you like the internal structure, just because it's gonna take a long time, guys. Now I'm just showing you like the external structures, what you should expect on the higher time frame. So as you can see from this point here, we have your previous high, of which it's this one, and it's protected, guys. Now protected high, and then your lowest point should be, as you can see here, we don't have the 3 candle pullback up until this point here. Then after having that, you can just use your Fibonacci tool. That is if you like using the Fibonacci tool, from the high to the low, just like that. As you can see, we failed to tap into areas of interest, but like what we did is that we filled this imbalance here. So let me just use a different color for the imbalance. So to fill the imbalance, then we sold off. So this is the imbalance area. Then we took out the low, just because we take out lows if we are looking for selling opportunities. So break of structure within this point. Then as you can see, this is the 3 candle pullback, which means that this is your high, this is your low, this is your area of interest around here, of which we failed to tap. But like on the lower time frame, if you refine it, you'll find an area of interest right there. Then we also had a fair value gap around that point. So if we can just move over with the charts, you can obviously see that we also have this as our new break of structure. So after having that new break of structure, what happened was what we had liquidity around this point here. So before we talk about the liquidity, you can obviously see that this is your low, this is your lower high, then this is your lower low around that point. So which means that you'll be looking for selling opportunities around this area here, this nice area here, and then this is another liquidity area. As you can see, relatively equal highs around that point, guys. So we mitigated that area, then we pulled down, but like instead of giving us like a change of character, just because we have internal structure, like I told you, as you can see here, this is your high here, this is your lower high, lower low, then we have your higher high, higher low, then you have your higher high, higher low. So we didn't break this low, as you can see here, so that we can get that change of character so that we can sell. But like we continue to push up just because this is respected, as you can see here, internal change of character. But like this is clear on the lower time frame. I'm gonna try to move over on the lower time frame so that you can see it. So this is the break of structure, change of character, the liquidity grab right there. Then we tapped into this area, respected it, tapping into this fair value gap around that point, just like that. Then we pulled to the upside, and then we had the liquidity, as you can see here. We left out this liquidity around this point, and then as you can see here, this is the area that we were looking at previously. So this is the area that we were looking at previously, and then we were targeting this low point here, which it got taken out recently. So we're gonna move over to the 15 minutes so that I can show you like the internal structure on this one here. So the 15-minute. So as you can see on the 15-minute, this is your lowest point. So I'm just gonna remove this area here. So we had a break of structure, then the market started pulling down. But because we are using the higher time frame, we know that this is our highest point, of which it's this one here. Let me just put it on the side, of which it's this one, and this is our lowest point here. Let me just remove that also. This is our lowest point. So whenever the market is pushing down within the here, we have the internal structure going on. We had the change of character. Then if we zoom out, and then you can also trade like the structure here. If you zoom out, you can see that we had this area here of imbalance, just like that. Tapping into that area of imbalance, the market pulled to the upside, and then this was some type of a grab of liquidity. As you can see, it was like relatively equal lows around that point. Then the market pulled to the upside, breaking the previous high, coming back into areas of interest. As you can see, this is our high, like I told you. Then this is the area of interest that I was telling you about here. Then we can just zoom out. You'll obviously see that this is your buy to sell candle here. Buy to sell, sell to buy candle around that point. Then we also had liquidity within this point here, just like that. Then the market pulled up very nicely into this area of interest, and this area of interest was a bit tricky on the previous video, but like I forgot to refine it, to be honest, just because there are like imbalanced areas that I was not looking at. As you can see here, if you can switch over to the 1 hour, that is where you'll get to see like each and everything that I'm talking about. So as you can see here, we have the fair value gap. We also have a fair value gap here. This is your buy to sell candle around that point. Then this is your fair value gap here. Then another fair value gap, of which it's this one. Then another fair value gap, of which it's this one here. So it means that the market was imbalanced around this point. There was a lot of areas of imbalance, so we had to refine the zone so that these areas here can be filled. then the market can mitigate into this area nicely, as you can see, to a T. Then you can place your sell around this point. Stop loss can be a bit tight, but like I don't like tight stop losses. 150 pip can be fine. Let me just do this. Let's just use 150 pip so that it can be clear. So as you can see right there, and then the target should be at the lows, obviously. So this should have been a 30% trade, guys, né? And I was anticipating this trade idea for quite a while, but like I didn't capitalize fully on this 30% trade overall trade here, but like it's still okay. So as you can see here, we have your high, your low, then you have your high, your low. Now we're anticipating the change of character, like I told you, or the realignment. So the high, the low here, and like I told you, the market will just push up, creating higher highs and higher lows. So as you can see here, we had a high, low, then this is a high, low, then break of structure within this point, giving us what? A new change of character, a new break of structure. So which means that this is a high, low. So you can just use the fib tool, like I told you, just like that. You can obviously see that we tapped into the 0.5 level, just into the 0.5 level, then we started pushing up. So we can just take this area here, and then you can just take your buys internally. Like I told you, you can take buying opportunities on the internal structure. That is if you know what you're doing. So this is the mid section, the middle point. Then you can just take a 200 pip stop loss, just because you can have like the same stop loss on each and every trade. So this is a 200 pip stop loss or a 20 pip stop loss, guys, né? So around here you can target like around 7%. So after that, we had a new break of structure, just like that. And for you guys to like avoid losses, you cannot avoid losses on every trade, guys, né? So as you can see here, we tapped into this area and then we started pushing down, and then the anticipation should have been what? Buying opportunities. As you can see from this point, we can just use the fib tool from the high, from the low to the high. Then you already see that this is your area of interest, of which it's this one here. Then after even that area of interest, we have liquidity around this point here. So that is the liquidity, and then now we are expecting what? For continuations of this overall trade idea. But like what happened, we mitigated this point. Then after mitigating that point, we know that the previous low has to be taken out. Then that is your change of character. Then after even that change of character, now we have to anticipate areas of interest. So from the high, just like that, let me just do this, from the high to the low. Then you can obviously extend this Fibonacci tool up until this area here. Then you can clearly notice that we tapped into this area of the golden zone or the imbalance, just because these golden zones are like imbalances. So you can just draw it out from this point to that point. That is your fair value gap. And then at the top of the structure, there was a supply zone at the top, just like that. So in this case, this trade here was like a bit difficult for those who are starting off with like SMC, but like it's not difficult, just because what you need to do is place yourself on the imbalance, knowing that this is your stop loss around here. So that is your stop loss. Then this is your overall target, just around this point here, just around this area here. And then mind you, we are on the 1 hour time frame, so it can be a bit tricky. So just like that, your stop loss, your target is at around 4%, of which it's not nice. But like moving over to the 15-minute, that is where you can get to refine everything and then get like a tighter stop loss. So as you can see right there, this is the fair value gap that we are talking about. Then this is your last buy to sell candle around this point here. Let me just make sure that I'm catering for it correctly, just like that. Then after that, you can place your sell just below here. Stops can be just around this point here. So now you have a 10% trade instead of having a 4% trade. So that is why I'm using the 15-minute very much, guys. Now, so moving back to the 4-hour, that is our current trade here, or that is our current idea. We have a break of structure, just like this. So we rinse and repeat, guys. We use the same style of trading. So as you can see right there, we can just remove this. Now we have to look at our areas of interest. So the Fibonacci tool is very important. So you can have your high to the low, just like that. And then as you can see, this is our golden zone, so we're just going to use the whole candle. So this candle here has to be used, and then we're gonna refine it on the 15-minute time frame. Then this is your imbalance around that point. So we can switch over to the 15-minute, just because this video has been a bit long than usual. So as you can see right there, we have this area of interest if we refine it on the 15-minute, and then this is also an area of interest, just because the market can just react to this one here and then sell off, just because we know that we have to wait for the realignment. So we are still safe, we are still very much safe up until the market taps into one of these areas here. Then I'll be expecting that type of structure to go on, this one here, whereby this is your break of structure, this is your change of character, just like that. And then this is your area of interest. So this is a QML, guys, to be honest. This is a QML. For those who know QML, guys, it's the same as SMC, whereby you have this Quasimodo pattern there. So I'm just gonna remove that. So as you can see, this is our overall structure or trade idea that we have, and then we can just look at the structure at the top. Then you can obviously see that there is an area of interest, of which is this one here at the extreme. So that can be useful at the extreme zone, just because if we don't have any confirmation entries around this point, like I told you, this is the confirmation that I'll be looking for. If we don't get it around here or get it around here, then we already know that we have to get a risk entry around the top of the structure, just like that. Then we can sell into this market here. So that is like the overall anticipation that I have on USD JPY, and I think I've explained a lot when it comes to smart money concepts, market structure. And then if you didn't understand, you can just drop a comment in the comment section and I'll gladly respond to you guys. I'll see you on another video.